Good evening, guys. Ken of Tortoise Capital, nightly strategy podcast for June 29th, 2023. We spent a lot of quality time in the Foundations coaching Q&A just prior to this, going over the foundations of the learning model that we use to develop, maintain, increase, and add to our professional body of knowledge through the deliberate process of scouting the environment, learning from our explorations. Wow, what happened to my screen? We still there?
All good.
Okay, strange. We'll try that one again. I'm going to... Good evening, guys. Ken of Tortoise Capital, nightly strategy podcast for June 29th, 2023. This is a quick look at the Foundations course basic learning model for how to develop a professional body of knowledge that relies on a rigorous exploitation of professional rules that give us an edge reliably in the market based on evidence, and supported by continuous improvement in learning about the world around us through effective scouting, thinking, assessing, reflecting, documenting, and dialoguing. It allows us to continuously improve and adapt to a market and a world that change around us, and knowing how to explore and exploit, and never forgetting the things that we learned along the way that we may not be using now, but which might come back into vogue later on. Like, we don't know what the total value of the things are that we've learned once upon a time until the end of the universe. Like, the things that we think are no longer useful may very well have another life left in them, and we just don't know it. So don't throw things away. Just carefully put them in their place with respect and remember where they are, and you'll be glad you did. All right, we'll start with the 30-minute charts on the hybrid trading system. And this is Alcoa in 30-minute charts. Here we go. Yeah, so this is Alcoa on 30 minutes. Again, this yellow box represents today's trade, the price action with the high and the low. The blue box represents the 5-day, so there was the 5-day low, there's the 5-day high. These red boxes reflect standard risk based on statistics for how much we know that we can refine our stop to based on critical state trading. Green is where we're buying, red is where we're selling. These boxes represent trade duration, so long here and short there. Okay. Price action up here, moving average, convergence, divergence down here, using our Red River and the 4 seasons of MACD to help influence our strategies. Color-coded RL10 showing the price action coded to the 4 seasons. So we can see price and what condition it's in directly. We pay more attention to that than we do the individual ticks of price bars. And then the all-important parabolic stop and reverse, which gives us our measures of trend. And when the PSARs flip, we pay attention. That's why we're long Alcoa now, is because it made a low, a higher low. That gives us a COTA 2, and that's a PSAR flip, and that's a standard risk. And it closed with a 0.5 in hand, because that's half the risk box, and an opportunity tomorrow to get up to 34.50, the peak of the RL10 from that wave, If it gets through that, we would think it could get to here, and then to here, and then to here, because that's the last places it got to before it failed. So we wouldn't be surprised if it could get there and started to fail in every case. So we're not predicting, but we do know where the turning points are. AI, the AI company, we had a really nice trade series here last few days. Today, at the end of the day, I elected to take the PSAR flip and reinvest some of this money on a speculative play. The fact that it failed to fail tells me the upside might be there. This thing tends to gap a lot, so I'm speculating on an upward gap using market's money. Caterpillar, we closed the trade from 3 days ago. This was a Kata 2 re-entry from a scratch, and then it didn't fail, and it resumed, and this was an emerging dragon because it broke out above the humps of the R10. Closed well yesterday. Today gapped up to here, ran all the way up. When it started to roll over, so that's enough, and we captured 1, 2, 3. Our no overnight risk anymore on that one, I should say. Cliff Natural Resources initiated the Kata 2 re-entry. So after this sell-off, this became a supported spring crossing, which we cashed here. And then because it made a higher low and the PSAR flipped, this is a Kata 2, and this thing blew right through resistance. Could have added a second position here, but was content. And now we're holding 1, 2, 3, and it closed very well, and a great American steel company, Cliff. CVS Pharmacy. So we initiated the supported spring crossing, standard risk, holding 1R at the close. Dish Networks, we closed the Kata 2 re-entry, and it gapped up and blew all the way to the top, started selling off. We cashed 2R, and then it stagnated the rest of the day. Devon Energy, Kata 2 re-entry from this trade, and it closed pretty well, holding 1R. Electronic Arts, now this thing was just so good the last couple days. This gave us double-digit wins, which was an extension of a 1R win there. It peaked, and so we said enough is enough, and then it's collapsed, but it made a higher low. So we like it. Re-entered. Closed pretty well, holding +1. If it breaks above 133, look out above. If it fails below 129.50, I'm short. Follow the price. Not predicting, just visualizing. Emerging markets, I like that this has had 2 days in a row of just kind of sideways consolidation. Yeah, it's stepping down, but it's right back to the support level that prompted this move. So a breakout from 39.25, I'm ready to take that intraday tomorrow. There's no way I want to hold that for overnight risk, being so close to this support level, because if it fails through 39.10, I'm short. It's postured right on the zero line of MACD histogram, and the signal line is underneath the Red River, so it is inherently weak, and it has to prove that it can make it, and that's why we're waiting to see evidence that it can make it. If it makes it up, 39.75 is the first price target, then the next one at about 40.25, and then it has to get through all of this gap. So if it breaks this resistance, it goes through here very fast. So this one is very interesting in both directions. Emerging markets. Ethereum, no trade, stabilizing. Mexico, no trade, sideways chop. Brazil, we were short yesterday, and it closed nicely in our direction. Today, it just monkeyed around and came back up, and we had to get out here to preserve a no-lose plus dinner for two. It was not persuasive enough for me to get long, so we missed this move. But I would be ready for a continuation tomorrow above this price level at 32 and a quarter. We would call that an emerging dragon. We would use a standard risk on it. We would aim for a target of about the 5-day high, then the 10-day high. And if it gets above 33 and a quarter, this thing is free and clear and good to go. But if it fails through, I would say the PSAR, I'm short, and I'll put a second position on here or at the 5-day low. So this one can break hard in either direction. It's Brazil, and that's why we love it. Whoops. We'll get back to you, Damien. Hang on. Intel. Shorted the collapsing dragon. IP. We cashed a really nice trade on this one a couple days ago. Yesterday we considered that as a COTA 2 entry, elected not to, missed the gap up, and then when it sold off a little but continued above the edge of the dragon with a rising PSAR, I said, sure, I'll give that a try. So we're holding about 0.5, and it has to break above the 5-day high and the 10-day high to really get our attention. But the first position is in. Skin in the game. IYR, this is the real estate. Excuse me. Emerging Dragon and a COTA 2 together. Off it goes. Probably missed a chance to add a second position there. But I looked back and saw this resistance level here. It has to really solve this problem. What is it going to do here? If it gets above 86.50, this thing is long gone and good to go. So I just want to have one risk on so I have some room for it to wiggle around in here without too much risk. But we're holding about +3 at the close, and I like that one's chances for tomorrow. No trade in regional banks. Initiated an emerging dragon in McDonald's. That one I certainly should have added a position to right in here because it's testing and above and going. And if it gets above 296.5, it is long and strong. So we like that one. Safety in that one. Merck. 2R in hand on a COTA 2. Microsoft. Boy, nothing there. The tech is just not coming through, but Main Street is. So this little choppiness is setting up a critical state ready to break in either direction. No directional bias. If it breaks below the 5-day low, you must be short. If it breaks above the 5-day high, you must be long. So the question really is if you want to try to get an initial position here and then a second position there so that you get that gain or you benefit from that sell-off. So your call how aggressive you want to be with Microsoft. I'll be ready to trade that one on 3-minute charts, though, because that looks like an opportunity. I like marijuana holding stable here. It had a COTA 2. It's going to break above this one tomorrow, and there was a little profit taking, but it recovered right away. I see that one having a good chance to get back up into here, so if I can put a risk box like that on it, and I can get 2-to-1 to the 5-day high, I'll try that one. It's a good intraday trader. NVIDIA, no trade, and like the rest of tech, has been disappointing. Clean energy, so we had a really nice one here over a 2-day period. There was the gap up and go, and today we took that and it rocketed straight up. But then as it came down, I said, you know what? Let me just lock in +1, even though we gave back 2 full R. We only got to keep about 1/3 of the open profit on that one. So probably let it go too long. But to be fair, that was a pretty quick reversal, and I was hoping for more, but it never materialized. So that should be in play tomorrow. I'm going to come back to Rivian. Treasuries, this is why I can't swing trade them. They just get murdered because of the overnight trade, and you can trade them intraday on the 3, 5, and 10 minute. It's hard sledding on the 30 minute. Just takes too long for the move to develop. Tesla, the most important stock in the world, just sideways chop. I think stabilizing here. I'll be short if it breaks. I'll be long if it breaks. Add a second position above 275 on my short list. U.S. Steel. This was another gap up and go like a COTA 2 because we had the higher lows consistently. And it ran all the way up and came back, and I had to preserve the no lose plus dinner for 2. I thought hard about adding this position, re-entering here. It was too close to the end of the day. Was not persuaded that this had any follow through because you would have expected it to keep going. It gave back pretty fast, so it just felt like a tactical noise, especially after this long run up. It felt like it was more towards the end of the move than the start of it, and then talked myself right out of that little game. So we'll see. If it keeps going above 25 tomorrow, that could be good. Now, Rivian, the trade of the day. So on a swing trade, this is why you want to combine swing trading and day trading, in my view, if you have the time and the skill and the patience. So this thing gave us a really nice move to the downside, completing panic sell-off, if you will, to the 30-day low. Had 3 days of not failing further, which gave us an entry on a supported spring crossing. The intraday strength the next day gave us a second and third position. As it stalled, we said, that's enough for 13R. We'll take it. And then today all it did was gap up, stabilize, and continue to go. So we added a re-entry, a second position, and a third position. And on 1 unit of risk, we're holding 1, 2, 3, 4, 5R on the first position, 3R in the second position, 1R in the third position. So we've got 9R in hand again on 3 positions. So we got a nice buffer. The only concern I have here is that it's right near the place where it collapsed before. But having 2 strong legs up like that, I have reasons to believe that this could be making a nice recovery, especially when we look even further back and we see how far this has fallen from grace. Let's get to back to the daily. This thing, has been murdered, and it has seen the dark times. And this is China needs electric vehicles. So to me, 20 is in play. I really like that one long term. So this one is not only going to be a hybrid intraday and swing short term, it's going to be a long term swing and a position trade for me for the next couple years. This is always on my radar. Always watching that stock. It's China, it's energy, it's the Chinese currency, it's electricity, it's an alternative to Tesla. It's China. Did I say I like this one? Yeah, I guess I did. So the 30-minute chart on this thing, that swing chart, we're holding 9R, and this is about a 30-cent risk. That's about a 30-cent risk. Now, when we go to the sniper trade of the day, let's look at how we can use the intraday 3 minutes in turbo to take advantage of the fact that this thing is just getting pushed higher and higher by the longer term time frames, to take advantage of these surges on the tighter time frames, using the same patterns but quicker decision making, that's what a mover looks like. Find the mover. So when we shift to the sniper trade of the day, we look like this. Now, just as a point of reference, our intraday risk on this thing is the R10, and that's about 12 cents, maybe 10 cents. Let's call it 12. And the range stat for reference is this. So from the low of the day when it opened, a range stat move to the upside is the maximum reasonable intraday move. And then we take that and we cut it into 10 slices. And we say that 1/10 of that is the R10. 3 of those usually works out to be a frog box. So you have a what we would consider a long-term positional trade, which is about $1.22 of risk, or a frog box worth of risk, which is about 30 cents, or an intraday risk of about 10 cents. And we're going to use the same patterns, but we're just making decisions quicker and quicker. So here's the open. Right here. And here's the OR3. That's the high of the opening range 3 and the low. In the next bar, it broke out, and so we want to be long. And here's what a 2R battle drill looks like. So if you want to play that way, you say, if it breaks through that line, I may commit to automatically adding a second position, because that's going to be 2 units of reward against the 1 unit of risk, and I just want to automatically buy that if we are employing that technique. My brother teaches how to do that in his sniper course with justification. And so at this point, price has moved up from here. Now I've hidden that price line, but it went straight up into here. And at this level, if you were going to initiate the 2R battle drill, you could add a second positioner, because there's +1 and there's +2. So if you were going to invoke the 2R battle drill, you would put it on there. And if you're using the standard risk, that little sell-off doesn't bother you. I didn't do it. I'm just trading. When it rolled over, I then trigger at the edge of the dragon, got a bad fill, so I'm out here. This is about 2R. And we started the day well. That was an emerging dragon pattern because it broke out higher. It broke out above the previous hump of the R10. That's also an OR3 entry. I like calling it an emerging dragon because I like that little stamp. All right. Now, if you were thinking about getting short, you might have gotten short here on the PSAR flip. You would not have lost money on that trade because you would have exited here when the R10 reversed and it entered the dragon. You just get out. It continued to make a higher low. And so this becomes the Kata 2 re-entry with the standard risk right here. Check or hold. And then if you were going to play the 2R battle drill, you would think about adding a second position there, and there, and there. And what we notice down here is that we had a, from the 0 line in the MACD histogram, right? We had a strong summer into fall, and then it held, and now it breaks up. That puts us back in the summer, so we love that. It's a Kata 2 and a summer, fall, summer, and so up this thing's going to go. We hope. We're betting that way. There's our little Kata 2. Now that's where you could add a second position. On your own paper right now, on your note sheet, little bar by bar workshop action here. This is what it's like when you take the bar by bar workshop with us. We put you in this position and say, you see what you see. You have your trading plan. Do you take a second position or not. And regardless, where do you put your stop? You remember that your stop started off here. When we do this bar by bar, we say, where do you move to no lose post enter for 2? Probably right here. And now you're here. Maybe you raised it to here. And now with your stop right there, and you've locked in this much gain, this is a positive +1 already locked in. Now what do? Do you add a second position? And if you do, what do you do with your stop? Do you leave it here or do you raise it higher? If you don't add a second position, do you raise your stop or do you leave it here? So in the bar by bar workshop, we put you in that kind of decision situation all the time, hundreds of times to practice these patterns. That's a really good value for developing your skill. It's on sale for the month of July. I did not put a second position on. I'm just playing this one at a time because I have such a large swing position on it, you'll recall. Pardon me. So there's my exit at the usual place. We cash +1. I noticed that the summer lasted to here, came into the fall. It's getting ready to roll back up into summer. The PSAR is holding support. It's getting ready to breach above the previous peak of the RL10. So I put a second position on and say, let's go. It hasn't reached the limit of the range stat yet, so there's still a reasonable chance that it could move that high before it becomes an abnormally good move. Check or hold. So we put him on. There's a COTA 2. Good dog, K9. Cash another R. Exiting at the PSAR flip. COTA 2 re-entry. Good job, K9. 1R gain. COTA 2 re-entry. Good job, K9. There we are. Doctor Who fans know all about K9. And we exit near the end of the day with about 2R out of the last one. And just grinding along, doing our thing. You got to throw a bone to the good dog. Sniper trade of the day, 7R, $700 earned for every $100 risked, or $70 earned for every $10 risked. Let's, don't go crazy. Trade at the level that you can be calm and comfortable with. So, sniper trade of the day, emerging dragons, COTA 2s, range stats, frog box, R10, OR3, 2R battle drill. Lots of things to study and learn from that one. Let's go to the traders. The day opens. There's about an OR3 here. Damien gets long, standard risk, rolls over, takes 0.5. It doesn't fail further, re-enters at a new high of the day, standard risk. Gets paid 0.75. Thank you very much. Stays out of the chop, sees the peak, sees the collapsing dragon, sees the PSAR flip, gets long or gets short here with a standard risk. Profits 1.25. Total profit today in going from the open, let's see, that's at 9:30 until 10:20. So in 50 minutes, 2.5R. Gratitude and forgiveness for the PSAR and patience. Community of practice and support. And this weekend he's going to learn how to use Snagit. I am holding out hopes for him. I am optimistic about that. Let's see. Mike. Nice breakout. He's long. It doesn't make a new high, so he cashes it. Doesn't fail further, so he re-enters. Doesn't work, so he quick scratch, quick re-entry. Probably stays too long because he did notice that the MACD had peaked and was coming back to the Red River. So this is the exceptional movement when it's above the Red River, but when it's coming back, the exceptional movement is over, and then more weakness is not surprising. So instead of getting out here, he maybe gets out here, but still 1.1, and you're getting paid to learn about using wider stops and trusting the PSAR. Nothing wrong with that. It's like being on a scholarship. All right, Tim, working Alcoa. The OR3 reverses immediately for -1. The OR3 reverses immediately for -1. The re-entry pays. Quick scratch stops trading -1.6 in Alcoa. Moves on to Apple. OR3 pays him a fraction. Pays him a fraction. Nets 0.6 out of Apple. He notices that Apple didn't move out of the gate, so he stopped trading that symbol. Goes on to find the mover. Nothing wrong with that. Tesla, the OR3 was a grinder. Gets a micro win. The collapse gave him a nice payoff. Gave back a little bit twice and then earned it back. So a little cut and thrust. 0.9. This was this nice move here. Failure to fail further twice. Man, his last try to the upside. And that's what made the difference between a scratch day and a winning day, was being able to just appreciate where the trade was in the time of the day, getting it done. And then he crushes wheat and precious metals. The OR3 pays. He waits for the SSC, smashes it, brings home 3.8 to net 3.7 for the day. And this was on a day where there was a lot of stress on the day job and was not easily able to switch symbols during the session. He found the only mover he had, and he rode it as long as he could. And most importantly, this is what I'm really appreciating, is he managed to do a zero-state preparation before the session started and just executed properly without worrying about thinking, and was able to observe but not be affected by the stress level, and then just managed it as best he could without allowing it to bleed over into the decision making. So that having that wedge between the stressing and the decision making is sign of an experienced hand at the wheel or with the reins. So very well done. All right, let's Satya brings some 1.2 in Tesla, and this was the grinder today. So the OR3 should be exiting not later than here. Got a bad fill hit here. Could have been short here. That probably would have kicked you out. So waiting for this is fine. We got to do better than scratch on that one. But reset, got paid. Scratch, got paid. 1.2, and we'll take it. A couple bad fills and maybe some imprecision, but still 1.2. Respecting the R. This is red. This is the New Zealand. The Kiwi. Look at these beautiful PSAR flips, if you would. In the forex, pay attention to those. That's a nice leg 1. Leg 2 was available. This short didn't work, so he cuts it. When it rolls over again, there's your collapsing dragon. Bang. And then there is your PSAR flip. Your second position when it breaks above the Z3 pinch. I don't mind that exit, but I would love to see that re-entry with the single position. Like if you don't put that second position on, I bet you don't get out here and you get to ride the whole way and you'd have gotten a second position here. So I don't think that's too late. Oh, I guess that's 2 hour battle drill. Okay, I stand corrected. But we'll take 4.6 and 2.4 for 7 for the day. We'll take that. This is Mike again. And this was a little wider angle view of his 1.1. But he nets 4 for the day because he also is getting this one. Oh, I'm sorry. Where's his 4 for the day? Here. Oh, okay. This one there. Sorry. Yeah, that last one only took us to here. And then this one gets us to here. Second position, getting done. Yep. And then the last one we have is tries the second COTA 2. I think stays too long. And that's a valuable lesson. And that lesson was learned. Don't let a winning trade on 3 bars turn into a losing bar at the PSAR. We maybe can scratch that. Okay. All right, that's everything we got for today. I will get the reports pushed out to you shortly. The Foundation's Q&A was excellent, well worth your time. For Patreon members and Foundations course members, you'll be able to see it in the course and on Patreon. So it was exceptional. Take good care, and we'll see you guys tomorrow.